here to shift gears and talk more about the latest in the overall, IPO and M&A space. I'd like to welcome in Christian Munafo, who's the CIO of Liberty Street Advisors and the portfolio manager of the Private Shares Fund. So thank you so much for joining us today, Christian, and really walk us through what you're seeing as of late in this ever-evolving, ever-scrutinized, frankly, IPO landscape.
Yeah, it's great to be back with you. Look, we continue to see the sentiment from investors continue shifting to the positive when it comes to this private innovation economy, as we call it. The market is bifurcated. So I think investors, are being very selective and disciplined, as they should, about which companies they are backing when it comes down to new rounds of financing, when it comes down to the capital markets, backing the IPOs, M&A, private equity buyouts, et cetera. But, if we look at just the exit environment, which, as we all know, has been quite slow the past few years, year to date, we've had about 24, I believe, called a couple dozen tech IPOs. The prior 3 years, we've averaged 4. So I think, one, it's nice to see exit activity pick up. We've also had a pretty substantial resurgence of SPAC activity. About 20% of those SPACs we see in the technology space in terms of the SPACs, the acquisitions that they're targeting. But all that said, what I would say is we continue to see some of the most desired late-stage private innovation companies surveying the markets. They're not rushing anything. So think of companies like SpaceX, think of companies like Databricks, Anduril. Those companies are able to consistently raise capital privately. They're taking advantage of improved liquidity in the historically structural illiquid market due to the more popular use cases for secondaries, and they have a currency, so they could facilitate consolidation with their currencies. That's not to say that we're not going to see more and more exit activity, including some of these best-in-class names. But we continue to think that the best names out there in the private innovation economy are still not yet public.
Christian, first off, I think it's really cool what you guys are doing, kind of trying to bring down the barriers to entry to access some of these different late-stage companies that you're talking about. But I want to get your thought on just the general change of the landscape over the last several years as things have gotten very, very top-heavy. And we think of some of these big mega-cap Magnificent Seven names as almost investors in their own way. I would say they are investors in their own way, and they're gobbling up these companies themselves rather than doing some of the in-house R&D. How has that changed your kind of role within this space, and has it made it more difficult to actually become investors in some of these different projects?
Yeah, that's a great question. Historically, when you think about where innovation comes from, it tends not to come from listed companies. Right. So you think back several decades ago to the mega cap companies you're talking about today, many of those were venture-backed startups. But today they're staying private longer and longer and scaling into these large private market capitalization companies. Now, from a regulatory perspective, right, there's obviously a bit of a bottleneck we've been facing the last several years in terms of consolidation for some of these larger public to private deals. I think to your point, some of that is starting to open up. But I think, frankly, the large incumbents who were once disruptors, to your point, they are looking very closely at where this innovation is happening. In some cases, you're seeing them invest in it. We've seen companies, like Microsoft and Google, et cetera, investing in these large language models, investing in these next generation, search-oriented, AI-oriented agentic businesses. But yes, they will be acquiring them as investors in this ecosystem. Obviously, you have to be thoughtful about that. And you have to make sure that you can hit the underwriting thresholds that are appropriate, whether it be an M&A or an IPO exit.
Yeah, and I think a good point there, and this has been such a space that's been scrutinized this year, but I think for good reason. We're all hoping for some degree of continual recovery. But so appreciate your time today. And of course, on this Monday, Christian Munafo, CIO of Liberty Street Advisors and PM of the Private Shares Fund.